Welcome back to the Dividend Diplomats YouTube channel. You're rolling with Bert and Lanny, the Dividend Diplomats, and we're here to talk to you about not one, but two possibly undervalued dividend bank stocks to buy right now.
Oh, that is absolutely right, everyone. This is our favorite sector. We are amped up to talk to you about these two behemoth bank stocks. But before we do, what are we going to do, people? Let's get the crowd up. Let's get the diplomaniacs hyped up here. Let's go, everybody, and smash that subscribe button. You know what? Just give us that thumbs up. Help us I think we're actually over 13,000. Thank you, everybody. Help us get to 14K, then 15K. Much appreciated. But Lanny, let's return to our favorite sector.
Guys, we're talking about banking. We love bank stocks, big banks, small banks, medium-sized banks, all size banks.
Redfish, bluefish, greenfish.
Who gives a? So guys, this is what it's all about. Big banks have been releasing earnings, and they are all over the place. Interest rates are fastly rising. Obviously, you've seen the mortgage interest rates right now finally are getting even closer and closer to 6%, possibly on those 30 years.
Hey,
definitely.
The one silver lining though, Lanny, is it's starting to creep back up again though. It's coming up with these rising interest rates. Those high yield savings accounts, we might need to drop the high from that. Some of them are getting a little bit north of 1. So that's at least an encouraging sign.
Yeah, shout outs to SoFi right now at the 1.25%. Gotta love that. But obviously the big banks aren't really doing anything from a savings rate.
These two banks we're talking about are not juicing up their savings rates. That is for sure.
And guys, we're talking about the big banks. So we're talking JP Morgan and Citigroup. We're talking the biggest bank right now of JP Morgan. They're at $4 trillion in assets, guys. So we're not playing around tonight. Again, we're filming this video here on April 19th. Probably set this to release on April 21st. So, again, share prices will be as of Tuesday night. So pardon any sort of delays or change in price. But guys, these banks have been releasing their earnings, and these stock prices have been plummeting. For instance, right now, Bert, what is JP Morgan and Citi looking at year to date in the last 52 weeks from a stock price standpoint?
JP Morgan is down 18.91%. Citibank is down 16% year to date, 52 weeks. JP Morgan's doing a lot better, only down 12%. Citi has been getting walloped, and they are down 24%.
I mean, I've always said trust Jamie Dimon, the head of the helm at JP Morgan. So guys, this could be a great time to pick up JP Morgan stock, down 19% year to date. And hey, keep averaging in on Citi. I know we've had a lot of Citigroup buyers in the last year. So guys, pricing is still very low. Yeah, Bert may be one of these investors.
I probably should take advantage of these prices to lower the cost basis there for Citibank. It's probably not a bad move.
Too big to fail, right?
Yeah. I think what's interesting here is in this heart of earnings season, while you'll see some other institutions that are lowering reserves that might not necessarily have the worldwide exposure that JP Morgan and Citi have. The interesting thing for those two banks is that you can see that they are increasing their reserves. They are adding in some factor credit losses due to some of the geopolitical issues out there, because who else is going to be exposed to worldwide issues outside of the two largest institutions in the United States?
And I mean, when you think of the institution, it's about the borrowings that they have, the loans that they've made out to these commercial businesses that do, worldwide business. So those businesses that are impacted are going to impact the banks where they have their loans from and lines of credit from. So yeah, definitely a worldwide impact when you think about the grand scheme of it all.
Yeah.
But yeah, go ahead, Bert.
I was going to say, now that we kind of know what's going on with their stock price year to date, have a little bit of insight into what's been happening on their balance sheet, just a little preview. You know what time it is, Lanny. I think it's time to pit these two banks head to head in the Dividend Diplomats dividend stock screener. That is not one, not two, but three simple metrics and one bonus metric. Lanny, lay them out for us, brother.
Well, let me tell you something, jabroni. No, we're talking about one, the price to earnings ratio, two, the dividend payout ratio, three, dividend growth rate. Last but not least, we will add in the dividend yield, which is how much does this dividend stock pay you to currently own them? So guys, JP Morgan, to kick things off here with the first metric of the price to earnings ratio. JP Morgan currently trading at $131.12. Analysts this year are expecting $11.08. So Bert, that forward price to earnings ratio, what's it looking like?
Well, it's looking like it's somewhere in between 11 and 12 at 11.83. It's less than half of the S&P 500 currently. Very nice there. Let's compare them though to Citibank, whose last stock price was $52.92 at the time we're recording. Forward earnings $6.70. Lanny, what is that PE ratio?
So JP Morgan might be just under 12, but Citigroup is actually just under 8.
Yeah, that is well, okay, let's see how the rest of the metrics play out here and see if there's that much disparity as we finish going through the stock screener. JP Morgan's annual dividend is $4 per share. Divide that by the forward EPS of 11.08. That gives you a payout ratio that's very nice at 36.1%.
Yeah, and keep in mind, JP Morgan did officially resume and had their first dividend increase, post the pandemic stall slash Federal Reserve additional stress testing. So they increased their dividend back last September. So expect another one this September.
I'm just laughing because the Fed held back dividend increases during the pandemic. That was one of the pieces that came out of the financial crisis. You had to rerun through the stress test to get approval to announce an increase in that type of an event. I'm making up the exact time, but let's just say the Fed made their announcement that JP Morgan could increase at noon. I think at 12:00 in like a fraction of a second, JP Morgan was like, boom, dividend increase. We're going here.
There you guys have it. So to get into that payout ratio for Citigroup, so JP Morgan was at 36%. Citi pays $2.04 or 51 cents per share per quarter. That payout ratio is also in the 30s at 30.45%, slightly lower than JP Morgan Chase.
Both pass, so there's not the same disparity that there was for the PE ratio. Let's talk dividend growth, though. This one's fascinating for JP Morgan. That 5-year dividend growth rate is, even with that little pause during the pandemic, 15.52% for JP Morgan.
Pretty solid. Now, Citi's is going to look huge because back when they started resuming dividend increases, about 5 years ago, I think in 16, they went from 5 cents to 16 cents. So that's huge. And then they doubled from 16 cents to 32 cents. And then from 32 cents to 45 cents. So they had some banger of dividend increases. However, during the pandemic of 2020 and even 2021, they have not increased their dividend in about 24 plus months. So they really are due for a dividend increase. But even with that, their 5-year dividend growth rate is still over 36%.
Gotta love these banks. Let's look at the yield here, because let's see. JP Morgan's yield is a very, very solid 3.05% there, Lanny. Well above the S&P 500.
Yeah, definitely more than two times the S&P 500, and then Citigroup is not too far behind. In fact, they're a little bit ahead here at a yield of 3.85%, almost 3 times the S&P 500, which is around 1.35% at the moment, Bert.
So both very solid yields, but as you can see here, Lanny, Citibank has a nice premium there for the yield. 3.8 is nice. So if you're at least not going to increase your dividend in the recent months after the pandemic's done, you're at least rewarding shareholders with a solid 3.8% yield.
Yeah, the month that they usually increased it back in the day is in July. So stay tuned to this summer. Maybe summer is going to bring some summer dividend heat to your portfolio for all the Citigroup shareholders.
Oh, how nice would that be? So should we throw in the one bonus metric here, Lanny, do you think, for banks for the valuation?
Hey, if you have it handy,
Yeah. So in addition to, we'll throw this in. We didn't mention it earlier. This one makes me laugh just seeing what some of this one is for, especially for Citibank. Banks, from a valuation standpoint, you also, in addition to looking at price to earnings, the industry standard is also to compare the price to book ratio for the two institutions. Lanny, what is JP Morgan's price to book ratio, and what do we typically look for when analyzing the price to book?
you want to look at a bank that usually is around that 1 times price to book, give or take. You're okay if it's still like over 1.1 or so. But really you want to try to find a bank that's trading near their book value. So JP Morgan though is trading about 1.52 times their book value. So definitely a premium right now on that standpoint.
Citibank, not so much. This is going to match the disparity of the PE ratio. Their price to book is 0.58.
So guys, there you have it. We'll show the dividend stock metric right here on the screen for you to take a look at. Really make a decision here. Are you guys buying JP Morgan stock or Citigroup stock? Which bank dividend stock are you buying right now? Bert, what's your feedback and take on these two stocks? Any plans?
So again, I have Citibank there to loss. It might not be a bad time for me to add maybe say 5 more shares to the position, lower the cost basis, not overextend myself. But I'm just going to be honest with you at JP Morgan from my perspective. JP Morgan always trades at a premium. This is the kind of bank that's always high. It's like your PGs of the world. A lot of the great dividend kings and dividend aristocrats we look at that just always have higher valuations. You don't get too many bites at the JP Morgan apple when the price to book is decreasing, especially if it dips below 1.5. So that'll be interesting to see if it keeps falling. What about you?
About me, I have no position of JP Morgan in Citi, and gosh, it's like I really don't want to have another bank stock in my portfolio. I own a few.
Sorry, I didn't mean to jump in. I get it though. I get that feeling.
I have been buying more shares of Provident Financial Services, ticker symbol is PFS, a couple shares here and there. A much smaller bank than these guys.
But your point is well taken. You own Provident. You're not establishing a new position. You're just adding to that one. That makes a difference.
Yeah. So, obviously, for the shareholders out there that don't own bank stocks, but want to buy and get into bank stocks, but are a little bit more, not to say risk averse, or, want more of a solid name in the industry. You really, JP Morgan is a great stock. They're, kind of like your J&J, whereas Citigroup is kind of like your, a little bit more risk, obviously with reward with the yield and possibly future better dividend growth possibly down the line. But yeah, two very undervalued dividend stocks right now in the market.
Yeah, so let us know, to your point, Lanny, what are you doing with JP Morgan and Citibank? Buying both, one, neither, or are you focusing at other banks in the sector such as Provident Financial? If you haven't already, subscribe to the channel. Everyone, give us that thumbs up. Thanks again for watching. We appreciate your support, everyone.
That was Bert the Hurt and Lanny from the Dividend Diplomats, over and out.